Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, at present, the Australian dollar is showing no signs of backing down as the bulls briefly captured the 75-cent handle on Tuesday. However, from a technical point, we do need to keep an eye on this RSI. Now, what pushed this move was first of all the rejection from 74.20, the bullish divergence, the outside range day or the engulfing candle, and also we got a weak hammer. Nevertheless, in terms of the pattern, and well, the MACD breaking just above the zero axis has put a trajectory target in the short term around 75, 60, 65, where I've outlined here. Now, as you can see from the previous upside attempts, there's been many failed candles in terms of the bearishness, and therefore I do anticipate that the move up towards this region should again fail. We should not be discouraged by the bullish technical signals. However, give enough room for error, that is, to see a move up towards this 75, 60, 65 before the market turns around and from that region looks back towards our base around 74.20. Looking at the euro, which is weighted to the US dollar index of 57.6, and the US dollar, which seen as also as the USDXY, measures the greenback strength against a basket of 6 major currencies, is a little bit mixed. However, there was a little bit of a rise this morning in the dollar index from 92.05 to 92.22 as we currently speak. This has put a slight softer tone into the European session for the euro. However, from the given pattern, I would say that the market may take another attempt to the upside, but likely to fail towards 119.15. I do anticipate from the primary pattern, being the weekly, is that we're still seeing quite somewhat a negative pattern, and therefore I believe that any upside attempts should fail. Still keeping the objective for the dollar index at 93, figure 60, which is around the March highs, and therefore looking for the euro to head eventually down towards the region of 117.50.80 as its objective and reassess from there. The dollar yen is slightly stepping up further as the yen weakness has come back into play and the RSI just breaking over the midway point. Therefore, could see another rise possibly to 110.80.85 into the European session. But beware, the technicals are weak. MACD still remaining negative. No trend from the ADX. The candles still engulfed in terms of inside trading or harami. That is that from this previous large sell-off on Friday, that is. Now, from the pattern, or Thursday, should I say, into Friday, from this pattern, though, I do anticipate towards 110.80.85 to fail and eventually see a reversal back to the base, seen around 109.60.70. That was briefly challenged last week. Sterling, not as bullish as we saw late last week. Nevertheless, the market still potentially holds to a somewhat positive pattern from the MACD breaking over the zero axis and also the RSI relatively holding over that midway point. At present, I still feel there is at least another attempt in the pattern here to the upside and look towards 139.60.80 where I've outlined here and reassess. The Bank of England will publish the financial stability report later today, and let's see how the market reviews those minutes. If the leg to the sterling remains somewhat positive, we've got a doji dragonfly here, and also a positive RSI, could see that test towards the top side, which may serve as a cap in the short term at 153.70. If we see a rejection from there, then we could see that turn the market back towards the bottom side of the range, anywhere from 152.65 to around 151.5. Well, the gold is still somewhat in a lackluster pattern here. As you can see, the market hasn't really progressed further to the upside as it still remains somewhat hesitant. Still, all eyes on the US into this week. We've got the US CPI, the PPI, and also US Fed Chairman Jerome Powell's testimony at Capitol Hill, which could give some light on how the central bank is thinking, and therefore could see a little bit of a rise in the US dollar and maybe see eventually a turnaround due to the recent long-legged doji here, and therefore an indecisive RSI, but we still need confirmation. That is a break beneath the level, now slightly higher, 1,786 to 88, to turn this market around back to 1,760. However, in light of the actual pattern here, and we're not completely breaking it down because it has respected that handle at 1,800, but we should still put in perspective a rise towards 1621 to 31 to 33 or 35, where this blue line is, before any rejection back to the downside. And finishing up with oil, the market is somewhat a little bit on the weaker side as it gets closer to that resistant level seen around $75 a barrel. With the market still a little bit on a uncertainty from OPEC standoff, and therefore could see a little bit of a whipsaw price action, but with a negative play here to the indicators, especially with the MACD, could see that price movement look back towards the recent lows seen around 69.5 to 70.20 a barrel. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.